by Mr. Sandeep Sangwan, Managing Director, Castrol India Limited, and Mr. Dipesh Bakshi, CFO and Whole-Time Director, Castrol India Limited. I now hand the conference over to Mr. Sangwan. Thank you, and over to you, Mr. Sangwan.
Thanks, Raymond. Good afternoon, everyone, and thanks for joining the call. I do hope you are safe and well, and so are your families. This is an opportunity for me to remind you to take all the necessary precautions like staying indoors, masking up when stepping out, and following hygiene to ensure we remain safe and healthy during these very difficult times that we face as a nation. A brief commentary on the first quarter results we announced for Castrol India Limited yesterday before we get into the question and answer session. As you're aware, we reported a strong financial delivery in first quarter, building on a resilient second half performance for fiscal year 2020 or financial year 2020, reporting robust revenue and profit growth, with first quarter revenue from operations at 1,139 crores, which is 66% higher, and first quarter profit before tax at 332 crores, which is 96% higher versus first quarter 2020. I'd like to remind everyone that these numbers look significantly high compared to the first quarter numbers of last year, as this period last year saw the onset of the COVID-19 pandemic and resultant business slowdown beginning in March 2020. And if you remember, in second half of March last year, that's when the country started locking down, which had an impact on demand last year. So please do bear in mind that the comparison is against that quarter. At the same time, I'd like to highlight focused investments, interventions, and actions taken in the second half of 2020 towards brand building with increased marketing and advertising spends. For example, we spent 65 crores in fourth quarter of 2020 versus 11 crores in the fourth quarter of 2019. New product introductions, we had Castrol GTX SUV in the SUV segment, in the cars SUV segment. We launched Castrol Power One Ultimate at the premium end of motorcycle portfolio, which is a synthetic product. And we also launched Castrol Active Cruise. So all these new introductions, coupled with some pricing actions, some corrective pricing actions that we took for our commercial vehicles portfolio, had yielded a positive impact on overall top-line growth. Our cost efficiency programs and judicious working capital management led to a healthy cash from operations at 269 crores in the first quarter, which is equivalent to 1.1 times of PAT. A key business development this quarter has been our strategic collaboration with Key Mobility Solutions. We will supply lubricant products to Key Mobility workshops in India and also be available on Go Bumper, their digital platform. This will help us to strengthen our network and expand our footprint, as well as build our participation in digital market platforms. Our plants continue to operate safely, deploying COVID-19 safety processes and guidelines as laid out by local governments to ensure we meet customer demand, while most employees continue to work from home. We all know that the second wave of the COVID-19 pandemic in India is resulting in a market slowdown in various parts of the country. We also see supply disruptions on account of base oil and raw materials availability, logistics challenges, and rupee depreciation. These factors are likely to adversely impact both demand and supply trends going forward. We, as the management team of Castrol India, are closely monitoring the situation, and we continue to respond with appropriate actions as needed. And with this, I conclude my opening remarks, and over to you, for your questions, which I have Dipesh with me, and between the two of us, we'll try and answer your questions to best of our ability. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Kunal Tanvi from Banyan Tree Advisors. Please go ahead.
Sure. Thanks, Sandeep, for the opening remarks, and congratulations on good set of numbers. So I had few set of questions. To start with, just a bookkeeping one. Can you help me with the volume number for the quarter? That is bookkeeping thing. And the second is on the advertisement fund. In the last quarter call as well, you had mentioned that we have been pushing it in the second half of the CY20. Now, how does that played out for the current quarter? Are we running with the same run rate in terms of putting money behind advertisement and brand building? That is question number 1. And second is we have seen a lot of talk about new areas as a company in the management team. We are looking to venture out for the in terms of which are ancillary or complementary to the existing business. Can you talk more about those areas and what kind of growth we expect from them in medium to longer term? Thanks.
Thanks, Kunal. Let me try and answer your questions if I remember them all in the order that you've asked them. I think our volumes for the first quarter have been at the range of about 61 million liters. Okay, that's the volume that we've delivered. To your second question on advertising, I think we are a premium branded lubricants player, and I think one of the strongest differentiators is the equity that we created for our brands, and we will continue investing advertising monies behind our brands. I think you've seen a spend level for the first quarter. Depending on how the pandemic situation goes, we will take corrective actions if required, but our intent is to continue spending at the same levels in terms of ratio to our top line. So we will continue investing behind building our brands. And the third question that you asked is any further areas of expansion. I think we keep looking at all the opportunities that are available in the market from that perspective. I think earlier we've spoken about the 3M collaboration and pilots we've been doing. Now, because of COVID, we had to take a pause in that because I think it was not advisable for people to get out in the markets. And we were thinking of restarting that by expanding the pilot to a few more cities, in addition 3-4 cities. But I think in the current circumstances of the second pandemic wave that we are witnessing as a country, that may get delayed by a few months. But that's one area which we are exploring. The second is GOBP collaboration, or our supply agreement to GOBP or Reliance Mobility continues to see progress and improve day by day. I think we have about 1,400 sites operational now, and where we are supplying our lubes. That second area. And the third area I've spoken about is like we keep looking at potential partnerships with the likes of Key Mobility, which gives us presence into more workshops and more chains that are coming up across the country. So hopefully, Dipesh, would you want to add anything? Or?
Sandeep, I think you've covered.
Sure.
Thanks,
So just one follow-up on that. When you say advertisement expansion, over a longer term, we have been doing 3 to 4% of the top line. Is that the right number to look at?
Yeah, I think that's been our strategy so far, and I think that'll be the right number to look at. And I think as per our strategy, we continue focusing on personal mobility and where consumers play a role, and our intent is to continue building our brands with these consumers and customers.
Sure. Thanks a lot. I'll get back in the queue, Sandeep.
Thank you. Thanks, Kunal.
Thank you. The next question is from the line of Sweta Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving me an opportunity. So I have two questions, and then I'll join back with you. So my first question is, if I look at the numbers, that employee cost has, sequentially, reduced significantly from close to 70 crores to 50 crores. So I just wanted to understand, is this sustainable, or do we see some employee cost coming back? And if you could also help us know, what was the cause of this reduction, sir?
So thanks, Sweta. Can I pass that question to Dipesh? Dipesh, if you'd like to respond, please.
Yeah, sure, Sandeep. Thanks. So the 70 crore cost that you see in the quarter included 19 crores related to a restructuring transformation program that we had run. So if you take that out, the cost comes in the range of around 50 crores, which is what the 1Q cost is looking like. Going
that
forward,
one time, right?
Sorry?
No, sir. Go ahead. Sorry.
Yeah. And I think you had a second question, which is this sustainable? Also, we have to remember that last year we had no increments and bonus. So from 1st April, that will kick in. So obviously that element of cost will go up to the extent.
Right. Okay. So this 19 crores was a one-time expense, right?
Yes, that's right.
Okay. Thank you, sir. So my second question is more in terms of just to understand, how is the correlation with our realization and the crude prices, sir? So if you could just help me understand that, what is a typical impact either on a realization or cost of material, say with a $1 rise in crude. Just want to broadly understand where do we, how does this matrix work, sir?
So I will answer at a broad level, and then I'll pass it on to Dipesh. So I think first of all, to link our cost inputs directly with crude is not the right assumption, because I think first of all our products have base oil, which is a derivative of crude, and then we also have additives that go into specialist chemicals and additives that go into making of a lubricant. And especially since we are a branded player and we believe in technological differentiation, okay, we do have formulations that are proprietary to us. So just to have a direct correlation with crude is not the right way to look at it. So that's one thing. The second is, I think, especially this year, what has happened is there is a shortage on base oil and raw materials. While crude prices are are trading between anywhere $60 to $70, but the base oil prices have been dissociated with crude availability because of a lot of refineries went into shutdown. So I think a direct correlation is not possible, but it does have an impact, and then we keep responding to those situations.
Okay. So just to follow up, with the shortage of base oil and additives, are we planning to take any more price hike in future? I think we did. Sorry.
Yeah, go ahead, please.
So I think we did take a price hike in January, and were there any more price hike in Q1, and are we planning any price hike in next 1-2 months, sir?
So I think we've taken a price hike in January. You're right, okay, and we've also taken a price hike in beginning April on our retail business, and that's public information. I think as far as future is concerned, I cannot comment on that. I think we just keep monitoring the situation, and we have a pricing strategy that we operate. which is a combination of various input factors, and depending on where the market goes, we'll take appropriate actions.
Okay. Thank you, sir. I'll just join back with you.
Yeah.
Thank you. The next question is from the line of Divyaga Dinde from ICICI Securities. Please go ahead.
Yeah, thank you. My question, the first question is on this volumes you have had in the first quarter. They seem to be one of your best quarterly volumes, if I'm right. So what was driving that, and to what extent is it sustainable?
I think two parts. Two parts as an answer to your question. So first of all, I think the volumes have been good, and what drove the volumes was, I think, as I stated in my first answer, some of the actions that we've taken in the second half of last year helped us get the momentum in the first quarter. And if you remember, in Jan and Feb, the overall business sentiment was looking very positive, okay, and across categories and across businesses. There is also an element of pent-up demand, because in the between March to till almost about July period, the demand was very subdued. People hadn't kind of serviced their vehicles, so there was a bit of pent-up demand coming back in the market in quarter 4 and quarter 1 of this year. So I think it'll be wrong to project these numbers for the full year going forward. But I think there would be a level of growth which is sustainable. But not the whole growth is going to be sustainable. And I think the other unknown right now is how the second wave impacts our economy. I think it's anybody's guess right now, looking at the way the numbers are increasing day by day.
Okay. My second question is regarding this. Now that your lubes are sold through these petrol stations of GOBP, so how much is it contributing? Was it a factor in this growth in the first quarter? And longer term, because I think both have stated that the number of petrol stations itself will go up. Could this be a big game changer? Because Castrol has had very modest volume growth in the past. Could this change that over the next 5 years?
It will definitely be a contributor to our top line growth ambitions. Okay, definitely, because they have about 1,400 fuel codes now, which will go up to about 5,000. Is that the only contributor to our top line growth ambitions? No, I think we have a strong presence in the retail trade and other channels of the business, and we continue focusing on driving growth in those channels also. So it will be a factor. Is it the only factor? I don't think so.
So just a related thing. So let's say 5 years down the line, what proportion of volume could come from sales through petrol stations? And I assume it will not cannibalize on what you sell through the bazaar trade.
So I think I won't comment on the percentages, because I think that'll be forward looking, and I don't want to kind of share those.
Will it be significant?
Significant to the overall business? Yes, it will be a contributor to growth.
Thanks a lot. I'll come for more questions later.
Yeah, thank you.
Thank you. The next question is from the line of Viraj Kacharia from Security Investment. Please go ahead.
Hello. Hi. Thanks for the opportunity. I just had a few questions on the EV side. So just trying to understand, what is Castrol India's play in EVs, especially, if we see in last 1 year, we have seen a considerable pickup in two-wheeler EV sales, in India, and there are aggressive plans by various non-incumbent players like Ola, Ather. So, if you can just spend a few more minutes in detail, on how are we looking to tap into EV play. That is one. And second, if you see globally, Parent has highlighted they have a 50% share in EV fluids. So how does it compare in India, and how is the pipeline in the EV for Castrol India?
So I think the EV space is still evolving. I think people are entering, and we have new offerings in the EV space. I think as a global multinational company, we have a very strong portfolio of products which are suitable for EVs. We've just launched a global brand called Castrol On, which is a range of EV fluids, including transmission fluids, including coolants, and other fluids that are used by EV manufacturers. I think as far as India is concerned, we supply EV fluids to two of the largest EV car manufacturers. Okay, and that space is still evolving, but it's still a very small play in India as far as our business is concerned. And I think we're constantly monitoring the situation so that we are ready with a portfolio of products to meet the requirements of electric vehicles.
So just one follow-up on this. Why I'm asking this is, if you see, our strategy has always been on capitalizing on the, personal mobility segment, and we've been quite ahead of competition in that sense. Now, if you see, especially in two-wheelers, the market is kind of rapidly picking up. It might be small, compared to the volumes in ICE at the moment. But that is where, you're seeing even the incumbent players aggressively talking about EV in two-wheelers. So just trying to understand, when it comes to, say, two-wheelers as a category, what is our play there, and when we say we have globally launched those fluids, in India, globally, how does it compare in terms of, say, gain cycle interval or in terms of business economics? Any color you can give, it just kind of gives more clarity in terms of the long-term sustainability of the business.
So I think as far as long-term sustainability of the business is concerned, there is a substantial vehicle park which is still internal combustion engines or four-stroke engines if you talk to two-wheelers, okay? And that park is not going to change overnight, and we are evaluating our plays in the EV segment. So for the next decade or so, I think we have a very robust business based on our current strategy of focusing on personal mobility. Okay, and as the market starts to shift, we'll come up with offerings which are more suitable to electric vehicles. That's all I can say at the moment.
But will it primarily be restricted to only transmission fluids or fluids, or when it comes to EV, will we also be looking at beyond the lubrication segment?
No, we will look at all fluids that are used by the electric vehicles, whether it is coolants or transmission fluids, and it also depends on the way technology evolves.
Okay, I'll come back in queue. Thank you.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Set of numbers. I just want to know how many touch points will get access to by our tie-up with Key Mobility.
I think I cannot disclose the exact numbers. They have a substantial network across multiple cities in India, okay, and they also have good expansion plans. So it's a tie-up we have with them for the next 3 years, and along with that, we will expand our presence. Key Mobility is also looking at growing pretty rapidly, and we hope to participate in that growth by partnering with them.
Okay. And sir, what percentage of our volume sales goes to OEM?
I think, Dipesh, would you have that number? I think I think our OEM-related business as a combination of first fill plus service fill is in the range of about 15% or so. That's the kind of broad number.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rohit Kadam from Entrust Family Office. Please go ahead.
Hi, thanks for taking my question. I wanted to get your thoughts on the comment which you've made in your press release on corrective pricing, which you mentioned on the call you've taken in your CB portfolio. Just the rationale for that as to what kind of drove that, and as a follow-up, if you would look to take more sort of corrective pricing actions in the other two-wheeler, four-wheeler kind of oil to kind of drive incremental market share gains.
Thanks, Rohit. Thanks for asking that question. What happens is, I think, as I've been saying earlier, also we are a premium branded lubricant player, and we do command premiums as far as pricing is concerned because we invest a lot with our consumers, influencers. I think what is happening is with the dynamic changes in the commercial vehicle segment, because one of the OEMs decided to kind of come into the segment at a much lower price point. So the pricing table had changed, and somewhere we felt our price premiums had become too high, and that was kind of impacting our top line growth ambitions. And that's the corrective action that we took in terms of making our price premiums more manageable based on the information we have, based on the data that we have that can help top line growth. I think as far as the other segments are concerned, we continue monitoring the situation, and if there is a need for corrective action, we'll take. We have a pricing strategy that we follow, and we'll stay true to that.
Okay, thank you, sir. That's helpful.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, congratulations, Sandeep, on good set of numbers. Hello.
Thank you, Bharat. Thank you.
Yeah.
Thank you so much.
Sandeep, one question: how over last couple of, few years since we have working aggressively on this mobility, personal mobility, particularly four-wheeler. So how the mix has changed among, two-wheeler, four-wheeler, CV and tractor, if you can, and industrial machinery, and how do we see going ahead? If you can give some color on that.
Yeah, so I think almost about 60-65% of our business comes from personal mobility. That's the broad range, and I think the reason we are focusing on personal mobility is because it also gives us a chance to upgrade the market, because consumers, customers, new cars, new motorcycles need better oils. For example, the introduction of BS6 helped us to bring in better products and more advanced products to the market. I think industrial segment is also a growth segment, and that's about 10 to 15% of our total business. So those are the kind of broad numbers if you're looking at that. And I think the personal mobility, focus on personal mobility also helps us in sustaining our margins.
Okay, great. And second thing, since this continues, lube technology, new technology keeps on evolving, and since then, because the drain period is coming down, so still do we think that we have reached to the level further, that won't be a much reduction in the drain period, which has impacted our volume growth over the last decade. So from here on, and second thing, that we have been working aggressively bringing a lot of synthetic oil also. So where do we are, at this moment in this synthetic oil business?
So I think there is a lot of opportunity for growth as far as synthetics are concerned. Synthetics are only about 10% of our portfolio, around 10% of our portfolio. Depends on which segment you're talking about. And I think there is still room for growth. I worked in Europe for about 7 years. I think where the market is already kind of if I look at car products, the predominant viscosities are 5Ws and 0Ws, whereas in India we still have a large part that is 10W viscosities. Or if I look at two-wheelers, the market is shifting from 20W to 10W. So I think as far as syntheticization is concerned, it presents an opportunity for upgrading, and there is still room for growth as newer technology engines come in. And I think that kind of also in a way compensates for the increasing drain intervals.
Okay, so still drain interval keep on increasing only, so volume growth will be, so it will be more led by value growth of a premium product.
So the category still grows at about 3%. Okay, it's not as if the category is declining or and it's expected to grow at 2 or 3% level, and our intention is to grow ahead of the market. So.
Okay. And last question on the, we had tied up with the 3M for their accessories, I mean, to distribute through our channel. So what's the, I mean, how that is playing out, if you can, or is it started contributing in some significant way, or how do we see this business?
I think I responded to that in one of my previous answers. I think we ran a pilot, and then because of COVID, we had to take a pause. We were rethinking of starting the pilot in the month of April, but again, with the second wave, we had to kind of rethink because we wanted to expand the cities from the earlier 6 to another 3. But once, let's see if the second wave of pandemic passes through, then we'll reignite that project.
Okay, thanks. That's all from my side.
Thanks, Parag.
Thank you. The next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon, gentlemen, and congratulations on this set of numbers. I have 2 questions. The first one relates to there's a lot of development in recent days regarding hydrogen fuel. So, are you looking into it? How are you positioned in the hydrogen fuel market? I mean, it's a very nascent market. I don't know about the global scenario, but how are you placed in this segment if it comes, say, in the next 4-5 years?
So I think hydrogen fuels is something that the larger BP, our parent company, is looking at. And I'm sure if there's a lubricant play in that, then our global R&D centers are collaborating with a larger BP to address that market. Okay, and as it develops, we'll see where that goes.
So globally also it is not that prevalent in any of the developed countries also. I don't think there would be any significant hydrogen presence in the automotive segment. That's right?
Not to the best of my knowledge.
Okay. And second is, you mentioned personal mobility, the current volume share is around 60 to 65%?
I think I was referring more to our value contribution rather than volume contribution. So.
Okay, so this includes some of the specialized industrial oils also, I suppose.
Yeah, in the sense, as I said, on personal mobility, the margins tend to be a bit better. So.
Right. So overall, your industrial mix that you mentioned at 10 to 15%, so that has remained similar only this quarter also in Q1, CY21 also.
Yeah, so we've seen growth in industrial business also, but that's the general level where it is stayed. So.
Okay. And just last question, you mentioned about corrective action in CV. So this corrective action is basically relating to your premium versus competition. And beyond that also, you took price hikes across the board in the month of January and April. That's right? So you've done this adjustment in the second half of CY20, but overall pricing action remains intact across segments. Is that the right way to look at it?
Yeah, your understanding is correct.
Okay. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Akash Vashisht from ICICI Securities. Please go ahead.
Hi, thank you for taking my question. So just had a couple of broad questions. Firstly, I just wanted to understand what is Castrol's volume sales mix? I assume you just mentioned the value sales mix, but I wanted to know the volume sales mix generally in terms of automotive and non-automotive. And within automotive, what is the breakup of various segments?
Dipesh, would you like to take that question, please?
Yeah, sure. So I think we sort of covered that earlier. We have automotive around 80-85%. And within automotive, you mean what? You were talking about personal mobility? Is that what you are asking?
Yes, personal mobility, if my understanding is correct, includes two-wheelers and passenger cars, and I think commercial vehicles is separate, it's just apart from personal mobility. So if we could just get the breakup between the three.
Yeah, so broadly, as Sandeep explained earlier, I mean, the personal mobility out of our total volume is about 40%, and industrial is around 15%, and rest is other commercial vehicles.
Okay. And my next question is, if you could just, roughly what would be the size of overall lubes market and the size of market where Castrol is present in and our market share?
So I can answer that question. I think the automotive market, lubes market in India is about 1 billion liters. Okay, and our share is about around 20%.
Okay, and what would be the market size, including the industrial and the marine segment?
So industrial is, I think, another 1,500, 1.5 billion liters or so.
Fair enough. Thank you so much for the question.
Thank you. The next question is from the line of Manikanta Gare from Axis Capital. Please go ahead.
Yeah. Good afternoon, sir. Thanks for providing me the opportunity, and congratulations on great set of numbers. Sir, last quarter you have mentioned that distributors' inventory correction has been done. I just wanted to understand here that has remained flattish in terms of the stocks that is there in the distributors has remained flattish, and there is no restocking done, right, sir, in Q1?
Yeah, in a sense, our intent was to help our distributors improve their working capital efficiency, and that's why we made that call.
Okay, so that means it has continued in Q1 as well. Is that understanding correct, sir?
Yeah, I think we've been holding our inventories at the level where we want them to be. So.
Understand. So my second question is, if I look at your latest presentation, from July onwards, the market share has continuously improved month on month. July, August, September continuously increased up to 20.5% in December 2020. Would you be able to share the latest market share as of March 21?
So we don't have any data for March 21, and typically I think we don't share specific numbers as far as market share is concerned. But you're right, in the sense we've seen improvement in our shares over the last 4 quarters continuously. But the market share is such a thing. There's always ups and downs month to month. But I think if the long-term trend is looking healthy, then we are happy.
Understand. Just one last question as a clarification, actually. You mentioned earlier that 15% of the total volumes is factory sales that are being provided to OEMs. So this is for Q1 or in general?
No, in general, I was talking in general. If you look at OEMs, which is kind of a combination of first fill, which is when the engines get produced or vehicles get produced in the factories, plus a service fill when the cars get serviced in their franchise workshops, and that is around 15%.
Okay, so that would have been... Okay, understand. Thank you, sir. That's all from my side.
Yeah.
Thank you. The next question is from the line of Shraddha Seth from Edelweiss. Please go ahead.
Thank you for the opportunity. Sorry, sir, I think I missed this part earlier. Just wanted to understand out of this, 61 million liters, was there some element of pent-up demand in terms of volume? I just wanted to understand the sustainability because sequentially also it is a very strong volume. So was there an element of pent-up demand which should not be repeated?
Yeah, Shraddha, absolutely. I think you're right. There is an element of pent-up demand and the general positive sentiment that we saw in January and February. Okay, and not all of this growth is going to be sustainable. So it will only be kind of part of that growth we hope to sustain. Okay, and your understanding is correct. Now, how much is the pent-up demand? Very difficult to kind of say whether it was like 10%, 15% or whatever, but there was an element of pent-up demand. And
between the segments, you said because of our corrective action and CVs, our volumes did well. But which is the segment which would have performed better amongst all in this quarter?
I think we've seen growth amongst most of the segments. I think if I look at commercial vehicles did well. If I look at motorcycles, I think motorcycles also did well, and they're growing, and that was at the back of some of the new product launches that we did, which also kind of achieved their distribution and volume objectives that we set for our new launches. I think the agri sector continues to do well, and I think that's the general sentiment. Even if you look at new vehicle sales, tractor sales are up, okay, while some of the sectors like commercial vehicles are struggling. So I think we've seen growth all across, but I think going forward, second quarter is going to be challenging, and it's a big quarter for the agri sector. So we're hoping at least some of the sectors to do well, but I think the pandemic will have quite a significant impact on second quarter performance, and let's hope it stays that way and we pass through the pandemic in the next few weeks.
And this is despite the second base quarter being very weak last year.
Yeah, I think second quarter last year was very weak because I think the country was more or less shut down for the month of April until mid-May. But again, very difficult to forecast the impact this wave will have on the business. But as a management team, I think we focused on three areas, and I keep saying that to everybody I speak to. I think the first important thing is safety and well-being of our employees, so making sure that everybody stays safe. The second is we want to make sure that we continue supporting the communities that we operate in, whether it is our mechanic brothers or our truckers and communities around our plants. The third area we focus on is on protecting financial health of the business. And I think we've learned good lessons last year, so we'll continue working with the same principles in this quarter as well.
Great, sir. Thank you and all the best.
Thank you. Thanks. I think, Raymond, we have time for only one more kind of question because I'd like to close the call at 1. So, please.
Sure. We'll take one last question. We take the last question from the line of Himanshu Upadhyay from PGI Mutual Fund. Please go ahead.
Yeah, hi. My first question was, so what price correction we have taken in the MHCV? What has been the market response from competitors, and the premium what we want to maintain would be competitor premium, or you think the absolute margin wise you want to have a gross margin wise you would like to behave in terms of premium what you want? So can you elaborate on that?
Yeah, I think I'll have to excuse myself from getting into very specifics of pricing. As I said, we have a pricing strategy and we stay true to that, okay, and we keep monitoring the situation. So I think I'm sorry, but I cannot disclose what kind of premiums do we want to operate at or what is the right level. I think that's for our strategy. How competition behaves or how competition reacts is up to them, and we keep monitoring the market.
And my second question was, see, some of the channel partners have stated that there has been some supply chain or issues, okay, or let's say the demand has not been, the demand has been strong, supply has been. And you also said about some base oil getting dissociated with the crude prices. Is there something of a supply chain issues, and have they improved in last April? This is what feedback we were getting in the month of Feb and March. Okay.
Yeah. So I think challenges continue on supply side. Okay. I think while Jan and Feb demand was strong, I think supply side challenges continue. Fortunately for us, I think as one of the larger players in the lubricants industry globally, we have long-term contracts and we've been able to secure our supplies of various raw materials. But the smaller players, I think, did face a challenge in terms of procurement because the the spot market was also very expensive, and the raw material input costs have gone up substantially over the last 6 months.
So the pricing of raw material is challenged, or the supply is tight of the raw material or base oil?
I think both are challenged. I think supply shortage is creating the pricing inflation. So that's how we look at it.
Okay. And you think this will continue for some time, or do you think that things are getting normalized?
Very difficult to say. Very difficult to say. I think if we were sitting and having this conversation 1.5 months ago, everything in India was looking very positive from an economy perspective, and things have changed. I think globally also there are many countries going through similar situations as us. The Western world seems to be coming out of it. So I think we just monitor the situation, and time will tell as to where it goes.
And one last question. In electric vehicle, the number of fluids which are required, can you elaborate on what are the replacement cycles for those fluids? And value of fluids in an IC engine vehicle versus an electric vehicle at the starting point? Can you just give some thoughts on that?
Yeah, so I think the EV technology is still evolving. Depends on which way technology goes, might impact the fluids used. But typically, the transmission fluids, engine oils EVs don't need an engine oil like the internal combustion engine. They do need the transmission fluids, and depending on which way the technology goes, they may need much better coolants, something that we call dielectric coolants for cooling of batteries. But still too early to call in terms of which way the technology will go and the amount of fluids these vehicles may need. But we have a range of products available to satisfy all the needs of an EV in our global portfolio.
Okay, and those will come through this company only, Castrol India?
Yeah. So I think we have our R&D centers located in UK and Germany, and that's where we do most of our R&D, to which Castrol India has access to.
Okay. Thank you from my side.
Thank you. I think, Remo, we can... I just want to thank everyone for attending the call, and thank you for your comments. And so let's hope as a nation we can get through the second wave of pandemic, and I just request that all of you stay safe and well, and please do continue taking all the precautions for you, your families, and your colleagues. Thank you very much.
Thank you, everyone. Thank you for joining.
Thank you very much. On behalf of Castrol India Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.